What's going on, guys? Welcome to the channel. If you are new, my name is Marco Ashu. I'm an 8-year futures and commodities trader, and in this video we're going to be going over if you are really looking at the correct things while trading, if you are setting yourself up for success while trading. It's not really going to be a trading psychology video. I'm going to be sharing my screen, everything that I have on my setups and all that, and it's going to be a good one. Okay, so now let's get into the fun stuff. So take a look. This is my screen. Now, notice anything completely different than what you normally see on a lot of these people's charts. It's completely naked, okay? I only have one. I wouldn't even call VWAP an indicator. I think VWAP is so important to have because, I mean, for me, because I'm a volume and price action trader. So when you have VWAP, volume weighted average price, it's going to help me, right? So I find that the market tends to really gravitate towards VWAP. And I like it personally. It works for me. You can see when the market gets far away from it on multiple occasions, it tends to always find it again. Now, some days it might be very far under it or very far over, but it tends to typically stay near it or try to gravitate towards it. So I like looking at VWAP as like a magnet. But yeah, moral of the story, and to summarize it, my charts are completely naked. You got people that, like, look at this. I'm going to show you. They put moving average, simple moving average, exponential moving average, and then they put the fucking MACD, and then they put the RSI. I mean, just look at this. I mean, how insane is this? I mean, you got people that literally trade like this, that have all this shit. And I'm like, dude, this is not it, bro. Like, it's just not it. I'm going to be honest with you. This is it. Simplify it. You are making your life 500 times harder by having all that bullshit on your chart. It's just the truth. It really is. It's really not that complicating. If you were going to be a shoe trader, or if you were going to be, I don't know, fucking a Rubik's Cube trader, whatever. If you're going to be any sort of trader, you're not going to fucking fill your charts with all this shit. Trust me, it's just not going to happen. You're going to keep it as simple as possible so you don't psych yourself out and make 500 different fucking conclusions as to what the hell's going on in front of you. Okay? So I keep it very simple. Naked. Now, market's about to open here in 2 hours and a half. So I figured, I would wake up early and make this video for you guys. So what's this? A lot of people might ask. A lot of people do ask me, hey, man, what's that orange thing or that yellow thing you have on your chart? Well, this is the volume profile. I think volume profile is so essential because it shows you the POC and it shows you the extremes of the top and the bottom of the profile. So I'll get into that in a second. So what is the POC? That's the point of control. That is where most of the transactions have occurred. Now, some people have their volume profile set to different numbers. I have mine set at 70%. So POC right here, this shows you where the bulk of the volume is. Now the POC does change. So let's say, the market's here right now, right? So the market's right here. Let's say it was to stay right here for the entirety of the day, for the rest of the day. This POC is going to shift up here. Now, what I like to look at is previous market profiles. This is how I set up my trading for the day. So I like to look at previous market profiles. So, for example, let me take this down to a 30-minute. So, for example, yesterday, I saw that right here in this whole area, right, you have a large low volume node. So what does low volume node mean? It means that not a lot of transactions occurred here. These are high volume nodes, the ones that stick out, right? Peaks and valleys is what some people refer to them as. So I told myself yesterday that, okay, I don't really have interest in longing the market. I don't, because if buyers were to be true on this rally after the news that of Trump or something, I got to look again. But if buyers were to be true, these dips would get bought and continue moving up. But the problem is the NASDAQ's been in such a range that I don't trust trading in that range. So I told myself, okay, evidently buyers are not really doing the best job of holding this up, okay? So what do we have here, right? We just went over this. It's the POC. So I'm going to mark this out as volume POC on March 23rd. That's what I'm going to mark that out as. And then let me change the color. Okay, so now let me take this down to a smaller time frame. So you can see here, we moved up into that POC from the 23rd of March, and we could not hold. Okay, now what we did, let me go ahead and put the outer range of this, or the lower range. I'm going to put that as lower range, volume profile. Now let me put that in caps. Hang on, just bear with me. Okay, lower range volume profile. Okay. All right, so now I already have the thesis. I want to see if buyers were true. Evidently, they are not, okay? They could not hold, they could not sustain the value of this rally even above the upper range of the volume profile, wherever it was, like somewhere over here. So now we're going into the lower range. So I told my guys, I have no interest in trading the market to the upside. We left a very big low volume node here that I personally believe the market has to go back and trade into in order to be regulated. It's leaving too much low volume here, too many orders not filled, thin liquidity. So I said, I personally believe, from my experience and everything that I've seen, the market should come down. It should. So that means I have to look for ways to be short. Now, there's so many other tools that I use to determine how I'm going to enter and exit the trade, and those are tools that I'll get into in another video. Now, going into the price action yesterday, so I caught a short off the open, made about $4,000. You can see it on my Instagram with my live account. So, right here. So I looked at myself and I'm like, okay, price could not hold at that POC from yesterday. Fine. We come down, move back into the lower range of the volume profile, still under the POC. So again, I'm telling myself here, like, okay, I still believe that we should come down. And then you can just look, every rally was getting sold into. Okay, so you got to pick up on these clues. Every rally was being sold into, despite the fact that we had a large move up. Rally, sold, rally, sold, rally, sold, rally, sold, rally, sold. Okay, you pick up on that. So knowing that, here was the pre-market low. Okay, there was the pre-market low. So I told myself, I'm like, okay, I got to figure out what I'm going to do here. So coming back into this, let me actually go on the 1 minute. Okay, so one clue, we're under the POC of yesterday. Second clue, we came into the lower range of the market profile. Market could not hold. So many instances where the market could just not hold. Okay, so moving into this here. Market's coming down here a little bit. Now, we got a nice move off the open. But what did I do? See this right here? So I looked at this and I was like, okay, there's a local high here that the market can take out, matching up with a previous low. So market comes up here. I did not take the short right away. I waited for this candle right here. Now, I know a lot of you guys are probably looking at these arrows and stuff and thinking, well, you had that thing tell you to do that. No, because this arrow only happens after the candle is closed and formed, and I took the short at 85. So why did I take that short? Well, if you see here the time and sales that I have, sometimes I like to filter it out to large orders. So at this time, there was a lot of large orders that were hitting above the offer price of the market, and the market was just running into a wall. So I looked at this and I'm like, okay, we're under VWAP. We're under the lower range of the volume profile. We're still under the lower range of the POC. market's selling off every rally, I'm going to stick with short. So once this pulled in right here, I took a short. I had my first two targets. This was the first target. This was the second target, but I held past them and I got out at like 150 because according to my pre-market plan, and you can see it in my Discord, my target was starting at 150 because I knew that all these people, oh crap, hang on, all these people that were in on this rally are going to have to give up at some point. And remember, low volume node, the market has to trade through this area. I still believe that the market will come down into this area eventually one day. So me knowing that, I'm like, okay, I have every reason to trade to the downside. Okay, came down. I started noticing some buying stepping in at the lows at my target. Kept it simple. Got out. Okay, so that's why it's very simplified for me. It's so easy to do this when you just keep everything so simple. And you could see how the market reacts off of these levels. I mean, shit, you could have shorted right here again and caught a nice little trade. You can see that the market gravitates towards these levels. Now, are they going to still gravitate here? Probably not. So obviously, today's a new trading day. I will assess this as time goes on. So for today, let's say, okay, we have the POC right there. So this is the VPOC of the 24th. Okay, you have the upper range of the volume profile right here. I should just make that as white. So upper range of the volume profile. And look, you can literally see how the market is just, let me get rid of this real quick. You can literally see how the market reacts off of these levels. So I'm going to look at this and be like, okay, well, every rally was getting sold into, but now we had this new catalyst that happened last night. Okay, now I look at this and I'm like, okay, looks like dips are being bought. So I'm going to look at this and be like, okay, if the market can sustain value above the current POC, and I see a lot of trapped sellers using tools, certain tools, I might look to trade to the upside. Now, are we going to get up to 24,764 from 22,472? It's possible. Market's already up 257 points. You have to also remember what you are asking for. That's asking for a lot, okay? I personally would not want that. I would probably look to target this high. Yeah, I would honestly look to just target this high. Find a way to get sellers trapped down here. Obviously, they believe that moving back into this area is a discounted price for them. They're willing to bid the market up, and there's some strong buying. So I'm going to look at this and be like, okay, if the market can sustain value above this 24,450 to 400 area with aggressive selling hitting the market, not getting rewarded, kind of like the sellers just running into a wall, the same way the buyers are running into this wall yesterday, I'm going to look to trade it long and target the pre-market high and the after hours high up here. So remember, just keeping it very simple for myself is really all it is. Keeping it very simple. So that's what how I normally trade, and that's how I trade on every single market. I'm going to go ahead and cut the video for a second so I could share my other screens and show you guys what I got going on there, and we'll continue the video. All right, I'm on the right side now. So this is my other monitor here to the left, and I'm going to explain to you why I look at everything here. So all of these that I have are either leading indicators or relative to what's going on, and I should be watching them. Since the way I trade is already the same for every single market, it's really easy for me to just, have everything that I need over here. And everything here has a purpose. So let's start with the top left one right here. So this is crude oil. So why would I be watching crude oil in March of 2026? Well, we're in the middle of a war with Iran. And if you take a look at oil, it's been moving. So the way I trade does not change. It's the same for every market. So obviously I'm going to be looking at oil right now, and I've actually done very well trading oil. Whenever an opportunity presents itself for me with oil, I will trade it. Okay? The S&P 500. Now, why would I watch the S&P 500? Well, NASDAQ and S&P 500 are two things that you should be watching if you're a futures trader. I'm just telling you right now. They can be leading indicators. Sometimes the S&P can be leading, and that will signal to the NASDAQ that it should be following, or it could be the other way around. Now, why do I have gold and silver? Well, this one's actually a little interesting because as of late, gold and NQ have been moving the same. So the same rally you're seeing on NQ is the same rally you're going to see on gold, and the same drops you see on NQ are the same drops that you would see on gold. So obviously I'm going to have that. And same thing, gold has been trending a lot recently. There's a lot of money there. So I'm going to obviously be having that on my charts. Now, why silver? Well, sometimes silver can be a leading indicator for gold because silver has more aggressive moves because it is smaller and it pays a lot different than gold, and it's honestly scary. Every time I have to trade silver, I get pretty scared. I'm not going to lie to you. It's a different animal. So sometimes silver can be a leading indicator for gold, and you could see their charts are obviously very identical. So everything that I have on here has a purpose. I have the VIX, the dollar index, fear index, right? I want to see if I'm short on the NASDAQ, I want to see that VIX moving up. It's only going to give more confluence to my trades. Everything that I'm looking at has a purpose. And notice, they're all very naked. They're all very simplified. There's nothing complex about what I'm looking at here. I'm looking at the simple price, the order flow, everything coming through, and using that for my judgment on the day. Obviously, before I go into the day, I write down, okay, so I have NASDAQ today. I might want to trade the NASDAQ. Let me see what oil is doing. Oh, oil looks like it might have a trade. I might want to trade oil. Writing down the levels, formulating a plan, planning the trade, and trading the plan. It's really as simple as that. So that's that when it comes to what's on my screen here. You can see gold trying to make a run for the highs, which we will see silver most likely following it as well. So gold is going without silver here. So gold at the moment is the leading instrument. So I would like to see silver also get that push up to give more confluence to gold. You want to see them supporting each other, right? So that's that on this screen. I'll cut the video and go to this screen. All right, so what do I have here? You're probably going to be asking me. Well, these are the 6 main or the heaviest weighted stocks in the NASDAQ. So if I'm trading NASDAQ, obviously I want to look at the big 6, right? I want to see the most weighted stocks in the NASDAQ to help my trade. So we have Apple, Microsoft, Meta, Google, Amazon, and NVIDIA. So sometimes I might be looking at these and I'm like, well, why is the NASDAQ just shooting up out of nowhere? And then next thing you know, you just see that, I don't know, any one of these companies could have had a major news report and is pushing the NASDAQ up, and you will see the rest start to follow suit. So once again, make sure everything that you are watching has a purpose. Make sure you are not overcomplicating things for you. I can sit here and proudly say everything that I look at from left to right, and including on my main screen, left to right does not complicate me. It does not. I already have the system that I trade. I have everything else that I might want to be watching on here to just keep giving me, what's the word? Just to keep me in the loop about everything. Just to keep making sure that I know what's going on in all the markets. Obviously, you're not going to see me have palladium futures or cocoa futures on here. Why would I have those futures on these charts? It just doesn't make sense. If I had 30 different charts right here, let me go back to this really quick. Where is this? Obviously, if I have palladium futures on here, I'm not gonna. It just doesn't. It's not gonna be what I want to trade, obviously. So it's just not gonna make sense for me to have that. Imagine I just open up another, like all these more tabs here and just put a bunch of other futures on there. For what? I don't need that. I'm good with this. This is all I need. And as you can see right here, I talked about gold moving up, and now silver's starting to get that move up as well. I do think it'll probably make a run for the highs. Also, you have to really ask yourself, and it's the same thing with trading NASDAQ or anything else. Always ask yourself, where does it look like it's going? Well, to me, after a nice move up here, nice little pullback, looks like this dip is getting bought. it looks like it's making a run for 4,600. And I like how it lines up with that whole number, 4,600. People don't tell you, yeah, man, I'm going to sell gold at 4601.23. They don't say that. They use whole number terms like 4,600, 4,400, whatever it is. So that's pretty much that on my charts. So that's pretty much going to do it, guys. I hope you learned something from this video. I will be going more in depth on a lot of these videos moving forward. I hope you enjoyed it. I hope you learned something. Leave a like, leave a comment, whatever it is. Support the YouTube channel. Just getting started. So I'll see you in the next video.